Hello traders, it's Friday, October 20th. This is Alan Hong, market analyst of GKFXPrime. So we're gonna share my daily analysis through this video. And first of all, let's review the major market movement. So the first instrument referring here is the dollar index in 4-hourly chart. The US dollar index, which measures the greenback ranks against a trade weight basket of 6 major currencies, was down 0.22% at 93.0 after the Labor Department reported US initial jobless claims fell to its lowest level in 44 years last week, so as the economy rebounds from Hurricanes Harvey and Irma. Another report showed manufacturing activity in the Philadelphia region rose unexpectedly this month, so the dollar has been bolstered by the speculation that President Donald Trump could pick a more hawkish various of leader than current chair Janet Yellen, and Trump is expected to make his decisions on November 3rd. While the euro continued to rise on Thursday despite Spanish political uncertainty, with EUR-USD pair rose 0.5% at 1.1844, which is its strongest level since October 13th. So the Spanish government said Thursday that it could suspend Catalonia autonomy after the region's President Charles Puigdemont threatens to declare independence, and Spain's Supreme Court ruled that the October 1st vote for independence was against the constitution and invalid. And sterling was lower on Thursday, with GBP/USD edging down 0.05% to 1.3199 after UK retail sales slowed more than expected in September, which underlying concerns that the economy is slowing as inflation rises. Having a tap in commodities markets, gold price was rose on the Thursday, up $7.48 or 0.58% to $1,290.48 a troy ounce, as an uptick in political uncertainty in Spain weighed on risk sentiment, while ongoing dollar weakness aided to upside momentum in the precious metals. So gold prices were on track to snap a 3-day losing streak, benefiting from political uncertainty in Spain after Spanish Prime Minister Mariano Rajoy says the country would trigger Article 155, allowing the government to take control of Catalonia after Catalan leader Charles Puigdemont failed to renounce the region's push for independence. So also supporting demand for gold was a slump in the dollar amid a fall in treasury yields, despite data pointing to underlying strength in the US economy. Sentiment on the gold, however, remained negative as market participants said the precious metals could come under pressures amid signs of solid US economic growth and expectations for a year-end interest rate hike. So gold price is sensitive to move higher in US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, with the US West Texas Intermediate crude price settled lower on Thursday, fell 1.4% to settle at $51.29 a barrel, as data showing a larger than expected build-up of product inventories continue to weigh on the sentiment. So crude oil prices fell as signs that OPEC could extend the global supply cut agreement deal failed to offset ongoing investors' concerns over data showing a sharp rise in gasoline and diesel supplies. So weekly report from the Energy Information Administration's release Wednesday showed U.S. gasoline stockpiles rose for a fourth straight week, while supplies of distillates, so the class of fuels that includes diesels and heating oil, which increased for the first time since August. So the uptick in supplies of refinery products such as gasolines comes amid a traditional slowdown in refinery activity as refiners undergo seasonal maintenance. So sentiment on oil prices, however, improved after OPEC leaders signaled of possible extensions to the output agreement deal, which is set to expire in March. So OPEC Secretary General Mohammed Bakindo that Russian President Vladimir Putin's suggestions this month that the deal could be extended to the end of 2018 were being taken seriously. So in May, OPEC and non-OPEC members agreed to extend production cuts for a period of 9 months until March, but stuck to production cuts of 1.8 million barrels per day agreed in November last year. So now we're gonna review the highlighted economic data that released on Thursday, as well as the focus data for today, Friday. So yesterday, Japan has released its trade balance for September, was at 670 billions, which is better than the expectations of 560 billions. So besides of Japan's, Australia also released the employment change for September during the morning Asia hours, and it was at 19.8 thousand, okay, which is better than expectations of 15,000 as well. So China has released the gross domestic product for third quarter, and as well as the industrial productions, which show a result better than expectations. And during the European trading hours, United Kingdom has released the retail sales for September, which show a result at negative 0.7%, which pressures on the Great British Pound on Thursday. So during the North American trading hours overnight, US has released the initial jobless claims, as well as the Philadelphia Ferris Manufacturing Index. Right, so both of these data will show a positive momentum to the US dollars. So as for today, Friday, Japan has released the the Bank of Japan's Governor Kuroda has delivered a speech during the morning Asia hours. So during the late night North America trading hours, Canada will going to release a series of economic data, including the core consumer price index for September and the retail sales. So on US side, United States is going to release its existing home sales for September, and the last data tonight is the US Baker Hughes oil count. It's technical analysis sessions. So first instruments will be referring to the Great British Pound against the US dollar pair in 4-hourly charts. So the sterling was lower on Thursdays after UK retail sales slow more than expected in September, which underlying concerns that the economy is slowing as inflation rises. So the pair GBP USD continued to fall lower after rejected by Fibonacci retracement level of 50 at 1.334. So it was closed below the support level of 1.317, signals to drop further towards the previous low at 1.303 and continue its downtrend. So as for upsides, the first resistance level we could refer to 1.317. Well, the single currency was continued to rise on Thursday despite Spanish political uncertainty. So the Spanish government said Thursday that it could suspend Catalonia's autonomy after region's President Charles Puigdemont threatened to declare independence. So Spain's Supreme Court ruled that the October 1st vote for independence was against the constitutions and invalid. So euro, however, against the dollar, remain traded within the range between 1.176 and 1.184, and referring to the MACD indicator with the both movement lines pointing flat, additional with the weak momentum, the pair is suggested to be traded flat in short terms. But however, the directions remain pointing downward as long as it's not able to close higher than the Fibonacci retracement level of 50 at 1.188. So we could refer the resistance level at 1.184 and support level at 1.176. And the Kiwi has fell sharply and reached the target as set previously at 0.698. So closing below 0.698, we're suggesting for continuations of downtrends and fall further towards the next support level at 0.682. On the upside, we could refer the nearest resistance level at 0.705. The Aussie remained traded flat within a range between 0.782 and 0.792, but however it remained the uptrend structures, thus closing above the resistance level of 0.794 will provide a signal to move further higher towards the next resistance level at 0.812. So on the downside, we still refer to 0.782 as its support level. The dollar remained traded at high territory against the Japanese yen, so with USD JPY pair traded near to the recent high at 113.4. So due to it remain the uptrend structure, thus closing above 113.5, we're suggesting for further upsides and continue its uptrend, and it could surge towards the next resistance level at 114.4. On the downside, the nearest support level can be seen at 111.2. As for commodities, gold price rose on Thursday as an uptick in political uncertainty in Spain, which weighed on the risk sentiment, while ongoing dollar weakness aided to upside momentum in the precious metals. So referring to 4-hourly charts, gold price remained traded in downtrends and currently hovering near to the support level at $1,283. So closing below $283, we're suggesting for further downsides. Then we could refill the next support level at $1,261. On the upside, the first resistance level comes in at $1,297 a troy ounce. And oil price has settled lower on Thursdays as data showing a larger than expected build-up of product inventories continue to weigh on sentiments. So the US West Texas Intermediate crude price now traded near to the support level of $51 a barrel and remain the uptrend structure. So however, with a closure below $51.10 a barrel will provide a signal for short-term retracements and could fall further towards the support level at $50 a barrel. So on the upside, we can only see a further bullish up with a closure higher than the previous high at $52.80 a barrel. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.